This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index at $31,619, recovering from yesterday's free fall, now up about 3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
The Luna Foundation Guard, the entity in charge of maintaining the UST stablecoin one-to-one peg to the US dollar, draining its $1.5 billion Bitcoin reserve and buying $850 million more in BTC to defend UST's peg. UST dropped as low as 61 cents on Monday, suggesting a potential collapse of the market's leading algorithmic stablecoin. Terraform Labs CEO Do Kwon saying the reserves are being lent to market makers. The move may have created sell pressure, contributing to Bitcoin's dip below $30,000 on Monday, as we saw the number of Bitcoin flushed onto crypto exchanges rising to its highest level in over 4 years, according to Glassnode data. Cryptocurrencies being placed on exchanges is often seen as a sell signal as investors look to offload BTC onto the open markets. This morning, UST returned to about 90 cents following LFG's, the Luna Foundation Guard's deployment of additional Bitcoin to preserve the peg. All right, joining us now to discuss is Katie Talati, head of research at crypto asset manager Arca. Welcome, Katie, to the show. So over the weekend, we saw Terra USD, also known as UST, depeg from the US dollar around 98 cents. And that led to Monday's crash to 61 cents. Luna, which is supposed to be burned and minted to stabilize UST, lost about half of its market value overnight. So maybe you could tell us, how did this all start in the first place?
Sure. Thanks for having me, Christine. So what exactly happened was that on Saturday night, this prior weekend, it looks like about $500 million was withdrawn from Anchor protocol, which, if you're not familiar with it, is the lend, borrow, earn protocol on Terra. Anchor depositors, essentially, if they deposit UST, they are given a 20% APY that is essentially subsidized by Luna or the Luna Foundation Guard. And so somebody ended up withdrawing a large amount of their UST from Anchor, and it kind of just started a bit of a bank run. After withdrawing it from there, they went and sold their UST via Curve, where there was very low liquidity for UST, and that essentially started the break on the peg. Following that, we saw more withdrawals from Anchor. To give you an idea, Anchor began the weekend at about 13 or 14 billion in deposits, and it's now at 6 billion. So it's seen, over 7 billion in TVL leave in the last 3 days.
Yeah, I think we do have a chart on that. There it is. All right. So do we have an idea who may have started this, who may have triggered it? I mean, I've seen theories online.
There's definitely been a lot of speculation. I know there's been a lot of names called on folks from the traditional financial world, folks from the crypto native world. To be honest, I don't know if we'll ever know unless they decide to come forward. There's a lot of on-chain sleuths going through the data right now and trying to understand who could have caused it. And they, right now it's been inconclusive.
So Terra Luna's market cap was at about $40 billion last month. Now it's at about 10 billion. UST was about 19 billion over the weekend. Now it's at 16 billion. So what is the main point here, however, is that over the past couple of months, the Luna Foundation Guard has been buying billions of dollars worth of BTC and other cryptocurrencies. And so there were warnings of, some sort of systemic risk were to come across the crypto markets at large if ever UST were to lose its peg. Did we essentially see that play out yesterday?
We did. I think that, we're still kind of collecting the pieces of what exactly happened. Specifically, there's a lot of folks who believe that the first thing they shouldn't have done is just sold or loaned out their Bitcoin. because that, as you saw, put immediate downward pressure on the price of Bitcoin. As it was loaned out, market makers sold it in order to be short. And that basically caused kind of like this cascading effect across the ecosystem. And unfortunately, as the peg on UST continued to deviate, there was just more downward pressure and panic throughout the market as people, said, oh, Luna Foundation is selling all their Bitcoin. I need to sell mine. I need to get on sides. I need to be risk off right now. So I think, unfortunately, it's kind of had an unfortunate ripple effect, as I said. I think a lot of people's worst fears did come to fruition, but at the same time, I also think it has to do with the execution.
All right. Well, Terraform Labs CEO Do Kwon is very specific about saying that the Luna Foundation Guard is lending out BTC reserves to market makers, so as not to say that they are selling their BTC for UST to stabilize the peg. But is that what is happening? Are they in effect using market makers to sell BTC and buy UST?
Not completely. The market makers are technically the ones who we believe sold the BTC after it was loaned out to them. And in this case, the market makers who were loaned the BTC would be short BTC. And now, for the most part, they're able to buy Bitcoin back 10% lower. So not only have they made money on their lending spread, but also on the short that they just covered.
And are they buying on exchanges or over the counter as well?
I couldn't tell you for sure. I would say probably a combination of both.
All right. So what is the outlook on Bitcoin? We already see Bitcoin has bounced back from yesterday's sell-off. So where do we go from here?
It's tough to say. I think a lot of people were starting to feel pretty bearish. I think we've seen the last couple of weeks that the broader crypto market has really taken a bit of a hit. The news of the Fidelity 401k retirement accounts, that news a few weeks ago was pretty impactful, and it had almost no impact on the price of Bitcoin in the market. And really that, in my view, was a very positive, catalyst for Bitcoin and, potentially puts a permanent bid in the market. I think that, right now, a lot of asset prices in general need to kind of correct and smooth out. I think this is, yesterday was probably the worst of the damage, but, I can't tell from here what will happen next.
Mm-hmm. Well, Do says that he has a recovery plan for UST. So I suppose if you want to speculate, what happens to Terra Luna from here on out?
Again, I don't know. I think it really depends on the recovery plan that gets announced, the execution. It does look like they just reported from another news outlet that they are looking to raise above $1 billion to help fix the peg. And I guess we'll see how that plays out.
Oh dear. All right, Katie, thank you so much for your insights. Appreciate you coming on the show. That was Arca Head of Research, Katie Talati. Coming up, we got more BTC price analysis with Syscoin Foundation lead developer and president, Jagdeep Sidhu. Welcome back. Well, who's buying Bitcoin's dip? The government of El Salvador, of course, for one. Theirs was the first country to make Bitcoin legal tender last fall, and they've continued their Bitcoin buying spree. President Nayib Bukele tweeting his government has purchased an additional 500 tokens for roughly $15 million, bringing their total to around 2,300 Bitcoins, currently worth just under $71 million. Meanwhile, El Salvador has postponed its planned 1 billion Bitcoin bond offering in March because of unfavorable market conditions. And finally, MicroStrategy CEO Michael Saylor suggesting his business intelligence firm will never sell its Bitcoin as its plummeting price raises questions about whether it might receive a margin call from its lenders. Saylor saying Bitcoin would need to fall all the way to about $3,500 before the company would run out of money, out of enough Bitcoin to pledge for that loan. But even at that point, MicroStrategy could post some other collateral. His implication is that theoretically there is almost no price low enough at which MicroStrategy would consider selling off their Bitcoin. They are the largest corporate accumulator of BTC. All right, joining us now to discuss is Jagdeep Sidhu, lead developer and president of Syscoin Foundation. Hi, Jagdeep. So, is it time to buy the dip?
Yeah, I mean, thanks for having us, Christine. I mean, I think what's happening with Luna and UST just provided the perfect storm for people who were waiting around on the sides to decide to get in on the right time. And timing the markets is always one of those things that is really frowned upon because you can never get it right. You can always get the structure properly, but timing the actual dip and getting in falling knife is never something that you really want to promote. But I would say that, since for a few years, I've been watching the Dow and the S&P, and 32,000 on my radar was something to look out for. And the market passed it without flying colors. And for me, I see that as a line of the sand. There's high correlation between the crypto markets as well as the equity markets. And anytime the equity markets have fallen down during a scare, either with inflation or interest rates or even the war, Bitcoin has been coinciding the last few months. And so I kind of view as something to watch out in the equity markets. If 32K can hold on the Dow, that's kind of the 30K barrier for me. And it is a triple bottom. If it holds, this is great. It's pretty much 2016, 17 all over again. If it doesn't hold, then yeah, we go into a little bit of a bear territory where we have to flip back to the weekly charts and watch for some stabilization before it makes its next leg up.
It's interesting. So how much do you think the sell pressure on Bitcoin yesterday was due to just traditional equities, or was some of that the systemic risks of the Terra Luna the Terra Luna ecosystem and the breaking of the peg?
I think it was a perfect storm. Like there was already market bearish pressure coming from New York and Europe closing up. It was pretty bearish overall, right? But the UST stuff was not helping. If someone did borrow 100,000 Bitcoins and were selling off a large portion of that because they can take UST and hedge their bets, they were potentially doing something where they were manipulating the price to break support. I was watching the chart all day, and I did see some sort of activity around supports or being pushed back down, but it was also timed around the time when equity markets were also making new lows. And so, for me, it was a perfect storm of circumstance. If there were some shenanigans happening in the UST Luna, they could have been contributing, but not the only sole factor of what was happening overall yesterday.
A perfect storm, but in some ways predictable, because the markets go up and they go down. And so if a big market event like this happens where you do see a mass exodus from equities, I mean, that is going to have an impact on the crypto markets. Well, we're seeing that impact on the crypto markets. And so how can something like an algorithmic stablecoin withstand that pressure? So, would love for you to weigh in. And do you have some thoughts on who may have triggered the exit from UST in the first place and Terra Luna?
Yeah, I mean, I think so. There were some facts, right? Like Genesis is a prime broker. They did a $1 billion OTC deal with UST. Three Arrows Capital is a crypto OTC desk and a hedge fund. They also did $500 million. So there's obviously in crypto protocols.
You've confirmed that?
Yeah, that's been a PR that's been released, and I have physically confirmed with my contact at Three Arrow Capital as well. So this is something that has happened, OTC to purchase bought UST en masse, right? And in a crypto economic system, when you have someone that's holding such a large amount, even if they're great guys, I know the Three Arrow Capital guys are great guys. It's just a large risk, right? And so we know that's happened. We also know. The funny thing is, it could be a fateful coincidence as well, but Joe has gone on publicly and said that he's going to go after the DAI community by using Curve. Very specific words, right? And if you look at what happened yesterday, the Curve was used to trigger the depegging when that single wallet dumped 300 million UST inside of the Curve finance protocol. So that was,
Why would he go after the DAI community?
I'm not sure. Well, obviously they're competitors, right? Because DAI is it's an algorithmic stablecoin, and obviously, Luna UST is supposed to be an algorithmic stablecoin system as well. And so it's there might have been something more behind the scenes, but to go publicly and say that, I mean, that's just being a builder in the space for many years, it's just something you just don't do. It's you should be making friends, you should be promoting tech. We're all in the same system together and growing as an ecosystem together. So
Right.
I'm not sure why he would do that, but it was a competitor he went after, and using specific words that he said Curve as well. And that's the same thing that went after and dumped the wallet on Curve for UST manipulation to happen.
Well, that's a bit alarming because, yeah, you would want folks to help out in the crypto industry, make sure that you have sound tokenomics to make sure these events don't happen and try not to perpetuate that onto other crypto ecosystems so that they can all live harmoniously, I would imagine. But how will Doe in the end reestablish his peg, do you think? I mean, our last guest just suggested that he's just going to try to seek out more investors, more money to plug the hole.
Plugging the hole is kind of what, I mean, if you really look into the research, I mean, the system that was created for Luna stems all the way back to BitShares back in 2016 when Daniel Armour came up with these ideas. And on Bitcoin Talk, we would talk about these things and debate whether they would work or not at scale, right? It's fine if you have a few large investors and make it seem like it works, but at scale, when there's $20 billion at stake, the incentives to break that peg get larger and larger. And so, even Vitalik, Ethereum's Vitalik weighed in on the fact that, if you have crypto economics, it's not the only thing that can stop your peg from breaking. There's irrational behavior. And as long as it starts the cycle, you can get people piling in and breaking the peg, and it may never recover. I'm not saying it won't recover now. It seems like it's doing well to recover, especially as they're pouring money in. But these sorts of systems, you need to really think deep and hard about the crypto economics and the incentives. You cannot count on rational behavior. And if it was just a circumstance yesterday because of the markets, it may have been just irrational behavior that had triggered the event, and then people piled in on top. Now it's left to be seen whether it can be recovered, but the viability long term of such a design is in question now, and that's something we need to go back to the drawing board to see if something like that can actually work at scale.
All right, Jagdeep. Thanks so much for your insights. Appreciate you coming on. That was Syscoin Foundation lead developer and president, Jagdeep Sidhu. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock Eastern. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.